Hi, good evening, everyone. Thanks for tuning to join us tonight. Before we get started, for those who still haven't filled out the questionnaire, please help us to do so. You can find the link in the chat room. We will start the webinar right now. I'm Alan here, and together with my colleague Weiren, will be the speaker for tonight. Tonight, we will be getting you through the US market, how they actually perform in this global lockdown, and also how you should react in this situation. So first, let's look at some numbers of this COVID-19 coronavirus pandemic. Right now, globally, we have over 3 million cases and there are over 200,000 of deaths. The death rate is then about 6.9%. At 1 month ago, it was only about 900,000 infected. It's up by 3 times within a month. In US, right now, as of Monday, we have 1 over million cases and there are about 56,000 deaths. Death rate is about 5.6%, slightly below the global average. While in Singapore, we have 14,000 cases recorded and 14 deaths as of Monday. The death rate is very, very low at about 0.09% only, which is very good things to us. And at the moment, right, we don't see the virus is going away anytime soon. The vaccine is expected to take another 1 to 2 years more, as they will still need to go through some clinical trial and testing. All the states in US, we see they have actually declared state of emergency. But currently, because there are some President Trump supporter and there are some protesters actually walking on the street to ask for economic reopening because they have lose their income. So this one, we will see how it goes. In the meanwhile, in Singapore, the circuit breaker we extended to 1st of June. Now let's move on to the key part of tonight's webinar. First part, I will guide you through with some US market update on some data release and company earnings and how the market have actually reacted. Second part, I will show you how you can actually generate some ideas from this kind of situation, what to invest on. And the third part, my colleague Weiren will be sharing with you some technical analysis, whether is it right now is a bull run or is actually a bull trap. And at last, we will have a Q&A session. So you can actually click the Q&A button at the bottom and post your question there. We will answer your question at the end of the webinar. So first of all, let's look at the FOMC decision and what they actually released. Back in March, there are 2 times of the emergency rate cut. First time was a 0.5% cut, and second time was actually a huge 1% cut, down all the way to 0 to 0.25% range. So together with the first emergency rate cut, right, FOMC actually also announced purchasing of a 500 billion treasury product and 200 billion of mortgage-backed securities to inject money into the market. At the second time of the emergency rate cut, FOMC actually changed their tone. They said that they will purchase whenever necessary. This is sort of a signaling they will be purchasing unlimited. There will be no limit of the purchasing, no cap. So at the moment, right, the federal balance sheet actually expanded to the all-time high at around 6 trillion. BlackRock's head of fixed income, Bob Miller, actually said it will probably spike up to 10 trillion in coming years. So what's next? Tonight, there will be another FOMC meeting. So could it be another further rate cut into a negative interest territory? Or there will be more massive purchase of the assets to inject more money into the market to support the market? So some people who are not familiar with all these terms, right, they might be having some puzzle. So in simple word, the Fed actually is just going to print money without limit by purchasing all these assets. So together with the 2 trillion fiscal aid, right, and this massive expansion of their balance sheet, right, we see that right now, at the moment, the stock market actually reacted positively by rebounding from the low in March. But the question here is this thing sustainable? So this will be another huge topic which will not be discussed in this webinar. Next, we will be looking at some of the economic data. In last month itself, the initial jobless claim actually total up to 26 million. This means that in last month itself, there are 26 million people lose their job in US. The non-farm payroll also turned into negative 700,000. Previously, it was actually fluctuating around positive 2 to 300,000. And this number expected to fall further into negative 20 million in upcoming month release data. The unemployment rate also raised to 4.4% and expected to raise further to 15% in May. For information, in the great financial crisis during the 08-09, it was actually only around 10% for the unemployment rate. The month-on-month inflation also dropped into the negative, which is probably signaling some deflation coming in. And the consumer sentiment also dropped to all-time low since 2011 at 71.8. Both the ISM manufacturing and ISM non-manufacturing, which is the PMI, the Purchasing Manager Index, one of the famous leading indicator of the economy, also expected to drop into the contraction territory, which is below 50. So due to the COVID-19, a lot of businesses are affected and they are forced to suspend their operation. So there will be no revenue or business coming in. So they are forced to cut costs either via retrenchment, via pay cut, or freeze their hiring. Some of the employees are also asked to take unpaid leave. So there's one example. Last week we saw on news that actually Disney, they have to close their park worldwide and they will be stopped paying their 10,000 over workers globally next month onwards. This is actually also happening in Singapore. So as we all know, US economy actually largely depends or driven by consumer spending. So this high unemployment and low consumer sentiment were definitely impacting the GDP growth badly. So from the released data, we can see the economy is not doing very well. And if the unemployment rate and the PMI continue to doing badly, we will see recession coming soon. Right now is also the earnings season for the first quarter. So these few weeks, last 2 weeks, we see the banks actually release their earnings, and like Goldman Sachs, Citi, Bank of America, Morgan Stanley, all actually reported their profit dropped by 30 to 40% in Q1. Effectively, actually in March, there was only 1 month of lockdown in US, but actually it's impacted their quarterly profit quite a lot. Bank also are expecting to write off more bad debt and bad loan in coming months, so they actually increase their reserve for writing off the bad loan. For the consumer staple sector, actually is sort of a mixed result. For Procter & Gamble, PG, they actually reported sales volume up by 5% globally. Pepsi also reported sales volume up as their demand of snacks and breakfast eating actually spiked due to people actually stay home. Hershey's sales also up by 1%. For Coca-Cola, however, actually reported their sales volume globally down by almost 25% in Q1. They quoted it is because due to their demand drop in their beverage sector. So in coming few days, we will have earnings release from the tech industry like the Facebook, Microsoft, Apple, Amazon, and also some big names in the oil and gas industry like BP, ExxonMobil. For the next quarterly earnings will be in mid-July, so we should be seeing the tourism industry and oil and gas industry continue to underperform. We see that they are likely to recover in next few months because even as US reopen their economy, right, this doesn't really bring a lot of help to these two industries because these are global issues. So from the earning release, we also see every industry actually impacted as most of the company pull off and revise their initial 2020 guidance. So typical defensive sector actually hit minimally. So if the lockdown continue, the next quarterly earnings, right, can only be worse. This is a chart movement of the WTI oil, which is more popular known as a US oil. You can see here at this part, the circle in the red color, which actually happening last week. The movement of this oil actually go into all the way negative 37. That means you are paying people to buy your oil. So why is this happening? This is mainly due to their dropping in demand and increasing in supply. As also there was this WTI future contract expiring last week at 21st. So the day before, right, this trading of this WTI all the way down to negative 37. There are also lack of storage space. That's why trader or speculator actually trying to offloading the contract on their hand. Next, this chart is showing you the S&P 500 movement from January all the way until now. So it was peaked at 3,391 on 20th February. And they start to fall and gapping down as the COVID-19 virus start to spread globally. And it hit the low here, right here at 24th March at about 2,200 points, which is about 35% drop from the peak. And since then, it recovered or looks like a V-shaped rebound up to right now over 2,800 points. It's up about nearly 30%. So I will launch a poll here. Let's show us what you think where this market will be moving on or heading to. Will it be continue a bull trend, or will it be coming down, or is a sideways? Or if you have no idea, just click no idea. Later on, my colleague Warren will be showing you some technical analysis on the S&P 500 movement. Okay, while you're still doing polling, I will still continue to the next part. Before sharing with you some ideas from the desk, we would also like to share some general common traits that the successful investor actually possess. So first, in this kind of market, you have to let yourself to stay calm. And secondly, you have to know yourself very well before you make any investment decision. Okay, no doubt right now the market is actually very volatile, and as an investor, especially those who are not always in the market right now, right? It's easily we get affected by the market swing or the market volatility. Your emotion will actually follow the chart to flow. So it's very important for yourself to stay calm and know yourself before you take any action. So first of all, to stay calm, there are some things or good behavior or strategy that you can practice. So first of all, most importantly, take a deep breath and keep calm regardless of what is happening or what you see on the chart. Also, you must ensure that your financial constitution is well managed and stable. Always look at your stop loss level to avoid any unwanted losses. And some strategy that you can actually pursue is like some recurring plan or dollar cost averaging, where you invest probably weeks by week or every month, regardless of how the market movement. Last but not least, you have to practice portfolio insurance, hedging, or diversify your portfolio to reduce the risk. There's a very famous phrase by Warren Buffett: do not put all your eggs inside one basket. So unless you're 100% sure that the basket won't fall. Some things that you must not do in this kind of market: do not panic, especially when there's a critical event happen, right? People actually tend to panic easily. Do not fear of missing out, because if you are fear of missing out, you may end up chasing at a high price. Also, do not simply take in market noises and rumors, especially nowadays. There are a lot of rumors and fake news are easily created. And most important, do not over leverage. You may end up losing more than what you can afford. So this article was written by my colleague Roger on how 4 easy ways to keep calm in this kind of volatile market. You may scan the QR code to access, or I will post the link inside the chat room and you can access it. Give me a moment. All right, the link is posted in the chat room. Okay, besides staying calm, right, you also must know yourself very well so that you can make a more informed decision that is suitable for yourself. This is because everyone will have a different personality, have different life stage, you have a different wealth status and different kind of exposure. All these will result in a different kind of investment strategy. So why is this so important? Ultimately, we all do investment is to earn extra money to make extra income. But this money doesn't come at zero cost. You don't get it fall from the sky. There's no free lunch. So for example, we work or we run a business, we have to contribute our knowledge, to contribute our time in exchange for the salary or for the revenue. So this is the same and is work in the stock market. So for example, before you apply for a job, right, you will have to do the research, or you have to understand yourself, know your capability before you can start a business. So similar here in the stock, you have to know yourself before you make an investment decision. So first of all, how to know yourself from the investment perspective? We generally categorize into 4 big categories. This will also help you in screening and narrow down to filter what are the stocks you to invest in. So first of all, what is your objective of doing this investment? Why do you want to invest? Is it you invest for a steady income, for cash flow, or is it for capital growth or seeking capital appreciation? Second, do you know what is your risk appetite or your risk tolerance? How willing are you to take up certain level of risk? Or what is your ability to take up certain level of risk? So this one you will have to find out is very important while you're making your investment decision. The third one is, do you know what is your investment horizon? How long can you hold this investment position, or how long do you want to hold the position? It can be as short as within a day doing a contra, or it can be as long as some people holding it for life. And last, you must be aware of what are your own constraints during investment. It could be your the fund size you have. It could be your daily liquidity needs. It could be some emergency issue happens. So all this must be clear before you actually make your investment decision. So you won't be over leverage or overdo what you can afford. So all these 4 categories mentioned above, right, will actually help you easily to filter or narrow down to your unique investment strategy. Next, after knowing yourself, you must also know what is happening right now before you do investment. So for example, right now we know that there is this COVID-19 pandemic, the virus spreading is actually affecting the economy a lot. The countries are actually locking down to contain the virus, and there are multiple measures actually implemented like travel restriction, movement control, and business are implemented with limited operation. People are also being asked to stay home to avoid contact with each other. So after knowing what is happening in the market or around us, you can actually derive from here what is impacted from what is happening right now. So for example, travel restriction and movement control resulted in the demand of oil is declining. The tourism and hospitality industry is being impacted heavily. While for limited business operation, right, actually caused a lot of retailers have to close their outlets. Factories are not running their production. People are being asked to stay home. So this will be a very big part as people and consumers actually change their daily lifestyle. So think of what is happening right now and around you. Working from home, less outing. So what are the demand actually declining and what are increasing? We see internet usage are increased. We see utility increase. We see purchasing of grocery increase. So the key things here is to observe and think. You can easily identify what are the sectors or companies to invest in by knowing yourself and then know what's happening and derive here what is impacted. So next, let's share with you some ideas what you can imagine. We will share with you on 2 different profile for investor. First is more for the short-term trader or those with very high risk appetite. So you can generally look out for stock which are at a price at multi-year low with very low PE, or stock which is actually heavily impacted by this pandemic and very volatile during this period. Or even you can look at company with certain level of cash flow stress, but potentially can be resolved. Do not look for those cannot be resolved. Okay, first industry you may look at is the oil and gas industry. As we all know, the oil price has been very volatile and actually dropped to all-time low recently. So it does actually present a potentially very good chance for short-term trader to capture some profit. Of course, it comes at a very high risk. Especially, you can look at some ETF like USO, UCO. SEO is the inverse one. So these ETF actually recently they experienced a lot of swing and also consolidation. So these are some of the risks lies under this ETF. Some of the oil company you can look at RTS, Royal Dutch Shell, BP, CVX is Chevron, XOM, ExxonMobil, and SLB. These are all the big oil company listed in the US. Next, you can look at the tourism industry, which is also heavily impacted by the pandemic. Airlines have actually grounded most of their planes. Cruisers have cancelled all their trips as people are not traveling right now. So some of the airlines like Delta Airlines, Southwest, United Airlines, American Airlines actually also hit their all-time low. Popular cruise company Royal Caribbean Cruise (RCL), CCL Carnival, and Norwegian Cruise. So plane maker are also indirectly impacted also for BA Boeing and Airbus in Germany. So some of the people may think that actually this stock that I mentioned just now are actually very low, so cheap now. Why not I buy it and hold for long term to wait for rebound? But do take note that low can also can go lower further. Company may be at risk of being built out or even bankrupt if they're actually having some cash flow stress or having some financial issue. And this pandemic doesn't seem to go away anytime soon. So let's say even one country, let's say Singapore, we're able to contain the virus, but some other country, they are not able to. We are not there to open up our border as well. So the airlines, the tourism industry will still be heavily impacted and still will remain under stress. Next, let's share with you about the profile of the long-term investor or more risk-averse investor. This type of investor will generally look for some company that is more fundamentally strong with a very healthy cash flow or cash reserve to survive through this critical period. So first sector we can look at is more of the consumer staple. For example, PG and Unilever, Procter & Gamble and Unilever, they are the two largest company in the world that are producing the fast mover consuming goods. You can easily find their products around you, your daily use of grocery. For F&B, you can look at Campbell, CPB, famous for their canned food, or MDLJ and KHC, which are Mondelez and Kraft Heinz, producing snacks and biscuit. I believe you all have stocked up a lot probably while you're working from home. And healthcare and hygienic producer, ABT, J&J, their sales volume also benefited during this period on their general healthcare product and hygienic product. For second sector or industry, you can look at the internet-related industry. So as mentioned earlier, right, the internet usage will actually definitely increase as people stay home. So some of the social media and advertising company like Twitter, where our US President Trump like to use to tweet whatever he like. Facebook, where people like to scroll at home. Google, you use to search whatever information you want. And also for online entertainment, like Netflix, FOX, Comcast, they are more well-known online entertainment provider in US. And for those who work from home for working adult, you will be familiar with this name: Microsoft, IBM, Fortinet, where providing security for company business, and Zoom, which you use for online meetings, and right now you dial in for the webinar. So last 2 weeks, Netflix actually reported a surge in the subscriber in their latest earning release. So you can see the demand actually increase. For Disney, actually also another popular company with online entertainment, but I'm not mentioning it here is because actually about 40% of their revenue still is deriving from the park, which actually closed worldwide currently. So these are the companies that you can look at if you are more of a long-term investor or a more risk-averse investor. Next, I will talk a bit about our features and also promotion right now. So for US trading, right, because recently we also received some calls and also some new people who join us. So before trading US market, first you will have to acknowledge this risk warning statement, RWS. Second, to submit the WFM form. This is a tax declaration form required to submit to trade the US market. And last, also to submit the CAR, customer account review. This is a form required by MAS for us to trade ETF product. So after submitted all these three and opening an account, you will be able to trade the US market with us. Okay, next we also have actually provided free live price. A lot of our clients still not aware of the free live price we've actually provided. For US, we have three market: Nasdaq, NYSE, and NYSE MKT. All these live price actually are free for subscribing. You can go under rewards tab to subscribe for it. Okay, this is one of the poll result that we actually casted our last webinar, where people think when the bear market will end. Most of the people actually think the bear market end in Q4 2020. Let's see what's the result just now for the poll. So as you can see, about 46%, most of the people are actually thinking that the market will still go down. Quite interesting. Yeah. Actually, market is rebounded right now, right? All right, let's move on. Next, we will have my colleague Weiren to share with you on the technical analysis. So stay tuned.
All right, hi everyone, good evening. So I believe that most of you have learned something from Alan, especially on the psychological part that he shares that on know yourself, how to manage your risk. That one is a key takeaway, I believe, from today's webinar. So proper do so, I'll move on along the S&P 500. So S&P 500, I'll use the daily chart. This is actually the live futures price. So it has been moving. So price actually let's move on to the hour. Price actually has a strong upside on the due to the fact that Gilead Science says that there's some breakthrough in the vaccine or etc. So that's why you have a spike up during the US Open on the Chicago Board of Mercantile Exchange. Do take note that futures do trade at 8:30 a.m. US time. So there's one more like 30 minutes to the official US market stock market open. So if you can see that the movement, right, the movement of the market is strong over here, but you see that it has been constantly testing the high at $2,907. Okay, so how it will react, we will see whether US will continue to sell down or will it continue to break through at the high over here. Okay, so move on to the daily chart. So the daily chart, right, currently we have complete the ABC of the down move, so of the expanding flat. So we think that market is going to test 61.8, which is at 2925.75, or even at 2963, which is over here the gap area. So once it tests the zone, we believe that there will be a sell down. So do look out for that. For any reversal signal. So it's not advisable to actually enter buy now for various reasons, because first of all, the market, if you can see what I circle, market is sky high over here. So if you're going to chase a market, your risk to reward is not like Alan mentioned, your risk to reward is not fantastic, because there's over space that there's some space that the market is going to actually get down. Okay, to have a breakdown of the channel, of the rising channel, and even if you take up at a high, the risk reward ratio is not very good. Okay, so what can you do? Let's move to the 4-hour chart. move on our chart. I believe that you can buy at over at if you notice that there's a strong area of demand over here. Okay, so sorry. Okay, there's strong area of demand between 22,778 to 208 2,810. Okay, so this is the level to take note of. Okay, so I move on to Nasdaq. Nasdaq. Why Nasdaq? Because Nasdaq actually is one of the market, the US market that has a very strong move. However, do take note that there is a potential double top and although price do trade and then do trade higher, notice that there's a divergence over here. Okay, pardon my drawing. So there's always a divergence and it's bouncing off at a 60 and 60 support line for the RSI. So once it cross 70, you'll be considered overbought. All right. So move on to the hourly chart. The hourly chart will show the same thing as Dow futures, YS1, but do take note that there's a resistance over here at 8,862, and furthermore there's a strong area of selling yesterday. So we believe that price will be heavily contested over here. All right. So I move on to next one. If you have read my report, was issued this morning. If you want to access report, you can go to stockbnb.com, which I will type in the chat later. Okay, I can type now. Okay, so you can access that. So for Nike actually have a strong five wave down movement. So the 5 impulse wave is actually a larger correction too. So wave 3 is here, 4, and we have a strong extension of wave 5 over here. So rebound started on 23rd March was very strong. So notice this arrow over here. So it has a strong impulse move up and then correction on 2nd April, means after April Fool. Yeah. So after that, after April Fool, it rise, but notice a rise converge in the rising wedge. And with yesterday sell down, a strong bearish candle. Not really a dark cloud cover, but it's a very strong bear candle now. It's almost a full body candle right off at $90. Okay, the high was $90.71, but it closed below $90. And notice that the bear candle closed exactly below the 200 SMA 200 moving average. So we believe that there will be a sell down over here, unless price break the resistance at 94.99, round off number to $95. Then we'll see a renewed session testing at the gap zone, testing this gap over here, all right, which is let's use the Fibonacci. And look, so it's around 88.6. Pardon me. Okay, so it's around 78.6 to 88.6. So these two areas is heavily contested. So if you want to look for long, for a short time, I would suggest this area of value is better. So it's around $79 to $80, and it will test. If not, if this area is broken, $70 will be the next viable option to buy. Okay, so next one I'm going to share is NVIDIA. To those who are in the gaming industry, NVIDIA is very it's not a stranger to most of you. So NVIDIA, same thing. Is forming a regular flat. So why do you say so? First, this is a wave A. So this whole movement is okay. Let me plot out using the wave pattern. Okay. Okay, let me replot again. So sorry. So C should be around here. So notice that there's a divergence as well. Fill out the gap. Divergence since yesterday. Strong bearish engulfing. Engulfed the shooting star at 90% and closing below $300. Okay. We have for 2 occasions divergence. And so we are looking at a short-term sell down towards 50% retracement over here. So if, however, if there is a surprise up move, we believe that price will actually gap up in the long run towards 123.6 is 347.80 cents. Okay, so but the probability of it going up to form a expanded flat or running flat is kind of impossible. Okay. So I'll share the last one. I think Netflix. People will talk about Netflix because I think a lot of people are binge watching show right now. So let's look at Netflix. Okay, Netflix on Netflix. I'll share on the weekly chart. Okay, so Netflix on the larger scale, Netflix Netflix close above. Let me see. Okay, let me take a. Okay, so is still at close below 100% of the whole move. Okay, first of all, this candle 2 weeks ago, it closed below $424.09. Okay, next candle, it has slide up, but it's still kept within the shadow of the past movement. Shows signs of low volume. And then if you look at the divergence, RSI, how the divergence move, it's not a very strong, it's not a divergence at all. But I want to point is that this up move from here to here is very strong. But do you notice that this is a steep movement, but it's a shallow tops. So it means that the divergence is the RSI is showing signs of slowing down. So we believe that price over the long run will correct itself to the base level at 252 in the longer run. So and then we look at the daily chart. Okay, daily chart shows a very strong. Okay, so if the daily chart will test the immediate support level at this level 392 to 380. This level will be heavily contested. Should there be a reversal, you will see price retest the high at $450 and then before correction and thereafter. So what right now is we believe that there is a strong sell down in the market unless there is there's a strong fundamental value in the stock market. Otherwise, I will suggest that look for buy at support levels and not chase the market. Like what Alan, as I mentioned, do not FOMO. So stay calm. Look out for any possible reversal signal at key levels. What are key levels? First, you can look for classic support resistance level. This is one area of support, and this is another area of support over here. All right. So open up for Q&A right now. Okay, so I'll pass the mic back to Alan. So he'll answer most of your question. Thank you.
All right, thanks, Weiren, for sharing on the technical analysis. Okay, this is contact of our night desk dealing. Alan, we have 2 Alan here for the US or Canada market, Roger and Mingjin for the UK and Europe. The number you can call in to find out more about this Europe and US market, 65311225. If you have anything, you can email to us also. All right, let's move on to the Q&A session. That's end of our webinar. So we will now pick some question to answer. In the meanwhile, while I'm selecting question, you can scan the QR code to help us to improve our webinar to give us some feedback. I will also post the link inside the chat room right now. I'm also aware that some of the people not able to join earlier or they join halfway. Do not afraid, not worry. We will upload the video to YouTube. So stay tuned and you can view the webinar again on YouTube. Okay, we have one question from one of the audience asking, since US is not doing well, why US dollars is going up? So I answer your first part of the question first. When US market not doing well, right? People tend to flow to US dollar. As simple as that. They see US dollar as a safe haven. When the market not doing well, the first thing they do, they will flow to cash. That's why US dollar is going up. The second part of the question is when US dollar is up, the gold should be down. So why gold is going up as well? So when the demand of gold actually is over than the demand of US dollar, definitely they will both going up together. Not sure if you all have aware of the physical gold market right now in actually, because of some of the mint house are actually closed, the factory are closed. So there are actually a lot of physical gold are out of stock. The demand of gold actually is very high in the market right now. We are not talking about the futures contract, we're talking about the physical gold. Yeah? So I hope this answers your question. Okay, we have questions on how does the earning release affect the stock price? The negative impact priced in already. Okay, for the first part, I will able to answer you. Definitely the earning release will affect the stock price as long as there's any positive news, any positive outcome or positive forecast during the earning release, right? The stock price is very likely to go up. For example, just now I just read the news on CNBC. Gilead, GILD, actually just announced their positive result and some positive forecast on the treatment on the COVID. And you can see right now the future actually shot up already. It's positive right now. This is how the earning release impacting the market. And the negative impact pricing already, this one